Good morning. Coming to you live from the worldwide headquarters of Network in Action. Today we have Mark Boudreaux, the bow tie insurance guy from Goosehead agent owner, Goosehead Insurance. Welcome, Mark. Glad
Thank
you
you.
made it in.
Thank you for having me.
Mark is from Spring, Texas, and we're coming to you live about 3 miles downtown Houston. So thanks for coming in today.
You're welcome.
Mark, tell us a bit about your background. Where are you from? And
Okay. Well, Scott, I'm actually from Galveston, Texas, born and raised. Went to school at Texas A&M University, so gig of Maggie's, and met my wife there, and lived in Fort Bend area for a while. Now I'm in the Spring area. My past positions, I've been an executive director with the YMCA. Also worked with a medical company doing some sales, and actually worked for a competitor insurance company a while back, but now with Goosehead. So
that happens a lot with Goosehead, right?
Yeah, it does.
You work for a competitor, then you see a better solution.
It's the best solution and go there. And so I've been married, right? It'll be 24 years this November, and I've got two. Thank you. Got two wonderful daughters, 20 and 21. They're both actually Texas Aggies also.
All right.
But the
you
family's
have any
doing
influence on that?
just a little bit.
Did you go to Ball High or?
I went to Galveston Ball, and I tell people it's only one high school anyway. We don't count O'Connell anyway. Only Galveston Ball.
That's the way people talk about my high school. It's gone now, but we used to play football against O'Connell.
Okay,
so,
all right.
Yeah, so great. Well, let's talk a little bit about the insurance business and your move to Goosehead. So I jokingly said that there's a lot of insurance agents that work for other agencies.
Yeah.
But it really is Goosehead's model is to put out a better line of products. Right?
So Goosehead Insurance is a brokerage. It's been around since about 2002. Started out in Dallas, Texas. The owner, Mark Jones, used to work for Bain Capital. What happened is they had a set of rent houses, him and his wife, and they could not find a good agent to work with them. So he decided, hey, I'm going to start my own company. The word goose came from a granddaughter of his. The nickname is Goose, so he called it Goosehead. So the main office is in Dallas. So we're all over Texas, of course, and we're in Florida, California, Virginia, and now like the Chicago area also. But I'm a franchise owner. Been with Goosehead right at 6 years now. Insurance business about 10 years. The thing about us as a brokerage, we can shop the market. Our goal is to find the best coverage, but also at a good value. We've had about 40 different home carriers, about 20 auto. We do some commercial and some life insurance too also. But, like my jokingly tell people all the time, if you want a Cadillac policy with all the bells and whistles, I can do that. Or if you want something like a Nissan Sentra with no AC, I can do that also for you. But we can write the state of Texas. That's what we do.
And in addition to automobile insurance, it's obviously property and casualty.
Yes, sir. So home, your primary home insurance. We do secondary homes, rental properties. If you're renting a house yourself or renting an apartment, we do rental insurance for that also too. So we do those.
And just to go back and, so if a consumer calls on another agency, we won't name any names, but State Farm's Farmers, some of these types of agencies out there, they're going to sell State Farm and Farmers products.
Yeah.
Is that right?
Yeah, they're what you call a single line agency. They only have one product there. I mean, a few of them have one or two extras they can use, but when you call us, we can look at the entire market. Like I said, we have, several different companies we can shop around with, and so we give you a variety, and we give you choice. That's the big thing is having choice. So if you want something with everything on it, we can definitely do that. Or if you're kind of that first time buyer and you want to get a good policy but you're not trying to get all the bells and whistles, we can do that for you also too.
Automobile insurance is pretty simple. I mean, it's a premium based on driving record and deductible amount of deductible you want to pay up front. What other real factors are
there?
Well,
with auto insurance, you got what kind of vehicle you're driving. Definitely the age of the driver. So, a lot of, families, always get that big hit when their son or daughter turns 16.
I just went through that. The guys doing the filming here can tell you I was in sticker shop. I kept grabbing my heart.
They want to know what happened. Well, they're looking at experience, really. As an older person, you've been driving 10, 15, 20 years.
Are you saying I'm older?
No, I'm a little older too. I'm older also. So I've been there, done that. Like I said, I have a 20 and 20-year-old, so I know that. But experience is the big thing, and then type of car, even the area of the car. Some areas of town, cars are stolen more than others. That can happen. Or like I say, if you're in a rural area. If you're in North, like Willis, Texas out there, you're not going to have a lot of traffic. Versus if you're in downtown, the Heights area, Houston, they're looking at where you are. But of course, driving habits. So if you've got some speeding tickets or some accidents, that's definitely going to be a knock against you and be a surcharge. But even with that, We've got companies that, even if you've got a lot of tickets, and sometimes companies will drop you, but we have companies that will accept you for that also too. But we also have some discounts, like multi-car discount. If you have that young driver and they, got at least a B average, they're taking some driver's ed classes. Most of our companies have a device now that most companies do where we can plug it in and it rates your driving for about 60 days. And if you're, good driver, you get a discount and maybe more of a discount. So we try our best to help you out as much as possible. But yeah, it's going to, depend on that driver, how that premium is going to come out.
So little simpler decision, but I've noticed and learned over the years with homeowners insurance, a lot of times people really don't know what they're getting or what they're not getting. So let's talk about mistakes you've seen people make when they're buying a home. They call you a week after the hurricane and say, hey, I got a claim. And you go, you didn't have.
Yeah. So one of the biggest things is, just like with auto insurance, with home insurance, deductibles matter. So the higher deductible, the lower your premium. And a lot of people say, hey, no big deal. I'm getting a new house. I'm buying a house for the first time. I want the lowest rated possible. Put the deductible at 2%, 3%. They want to do it, and I talk to them about it. But if they want to do it, I do it. Well, if that home is $200,000 house, that 3% deductible is $6,000 versus a 1% deductible, which would be $2,000. So yeah, hurricane hits, tree falls on the house, and damage the roof. They get an estimate. Estimate's $5,000. Well, deductible, if they have 3% deductible on a $200,000 house, that's a $6,000 deductible. So you haven't met your deductible.
Is that per incident or annually?
It's per incident.
Per incident.
Per incident.
Wow.
So now they're upset. Now, okay, well,
I had insurance.
I had insurance. They won't pay for it. Well, you got to look at what you're getting.
Right.
One of the biggest factors that people don't look at is water coverage. And I'm not talking about flood. I'm talking about water inside the house. So there's 4 water coverages you can have in the house. One is called sudden accidental. The other one's called water backup. You have water foundation and seepage. And what we're talking about is the pipes that are running through the 4 walls of that house. Okay. So if you come home one evening, and your ceiling is leaking, not because of the rain, but a pipe may have burst. Well, if you have the right coverage on that can be covered. A lot of times people don't get all 4. They get 1, maybe 2. And the one a lot of people don't get is the water foundation or the water seepage. Seepage is a tough one because seepage is something that happens over time. So you buy a house
coming
today.
In from the bottom of the foundation.
It could be foundation. It could be even the walls. Because you might buy the house today. 5 years down the line, you go to move an appliance or something, and behind there's a big brown spot or it's wet. It could have been leaking for years, for months. And some companies won't cover that. And I try to make sure I offer everything I can for people. But a lot of times they don't read that policy and see those things. So
those are actual check boxes that the consumer decides, I need all 4.
Yep.
And honestly, go through all of them for us.
Okay. So sudden accidental water damage, or /SA, that's if you walk in the house right now or walk in this room and the roof is leaking. That happened right now. Right. Boom, you saw it. And it probably a pipe broke or something like that. Water backup has to do with like most houses in Houston. A lot of times it could be that, but also think about a lot of homes in Houston have that water heater in the attic, which I don't understand why they do that. But if that bursts, crack, whatever, now you've got leakage coming all over the attic and down the walls or wherever else. That's water backup. Or your toilet backs up, your dishwasher. That covers that. Then you have water foundation, kind of you were talking about before. That's the pipes running through the foundation of the house. That if they were to crack, cause the foundation to have some issues, they will cover that. The last one is seepage. So that, like I said earlier, it may have a slow leak going on right now in your house, and it's just dripping. And like I said, you go to one spring, you go to move the refrigerator, sweep behind the refrigerator, and you see this damp spot back there. It could have been going on, like I said, for months, for years.
Wow.
And they will cover that.
I thought it was just a matter of choosing flood insurance. So let's move to flood insurance.
Okay, flood insurance. Flood insurance is the water coming from the outside in. I'll give you kind of a thing I tell people. Flood insurance covers dirty water, all right? Your home insurance will cover what I call clean water. So let's say hurricane hits, half your roof blows off, it rains in your house for 6 hours. You might have an inch of water in there. Your home insurance will cover that because the reason it happens is because the roof blew off from that hurricane. Okay. Flood insurance is coming from the streets, across your grass, across your mulch. It's going to be dirty water. So it's covering that water coming from outside in. So flood insurance can cover all your belongings, your tables, TV, chairs, pots and pans, clothes, those kind of things. It also covers the structure. So we need to tear out sheetrock, or you have to replace flooring, replace cabinetry. Matter of fact, I got flooded during Harvey. I had a foot of water in my house. So I know, and thank you for that, I know what it covers there. Yeah. But
You had flood.
Of course I did. Of course, if I didn't, I'd be a really bad insurance agent. And I was telling somebody earlier before I came in here is that a lot of people, they just think it's not going to happen to me. But I always offer it. My thing, if you're buying a $200,000, $300,000 house, one of your probably biggest assets you're ever going to have, you probably should get all the coverage you can in case something was to happen.
And it doesn't increase the cost like that dramatically, does it?
Yeah, so like your max flood, standard flood, is like $250,000 for your structure of the house, and $100,000 for your contents, tables, TVs, chairs. That'll cost you for a year $482.
Nothing.
So that's 2 or 3 trips to Starbucks, a month.
Yeah.
So you can cover that. Most people's cell phone bills are $300-$400.
Yeah.
So
what percentage of people would you say, like in an area or like in Harris County, is it a small percent that have flood insurance?
A very small
it's probably
percent.
growing after.
And I don't remember the numbers.
Last 500.
I can say I don't remember the numbers specifically, but after the flood, I read a lot of articles where most people who had flood insurance, their homes were what they call high-risk flood zones anyway.
Okay.
Of those who got flooded, who were in a not really high-risk flood zone, only about 15% of them had flood insurance. Yeah. In my neighborhood itself, let's just say 100 homes got flooded, probably only 20 of them actually had flood insurance.
And you get lulled to sleep. I've lived in Houston all my life, been in my home for 18 years. We've never even had water close. I've never had water within 10 feet of my. Yeah. But the more construction I see going up, the more concrete I see being poured, that water's got to go somewhere. So I'm realizing that we probably ought to start looking.
What I tell people a lot of times, you think about, especially a brand new neighborhood, there's just homes out there. But when you start building that new school out there, that new strip center, that new mall, that water's got to run somewhere.
I grew up here, and all you did was go dove hunting in Katy, Texas.
Exactly.
You drove 8 miles or 10 miles west, and people go, I don't know why that floods so bad. I'm like, are you kidding? It's
exactly. It's a concrete jungle.
Yeah, on top of a rice field.
On top of a rice field, exactly.
So, in addition to flood insurance, deductibles are important. What other mistakes do you see people make? I mean, it's so difficult to read that policy. Let's be honest. I bet you less than 1% of people read what they're getting. So you need a trusted agent. That's number one.
Yes.
But what other mistakes do people make?
I talk about people read the policies 2 times: the day they get it and the day they have a claim. A main
they
thing,
read it more thoroughly the day they have a claim.
Exactly. Well, in home insurance is your coverage A. Coverage A is the dwelling on your home. So that's what they're going to pay to rebuild that house. A lot of people will look at it in that they look on the market or HCAT. My home is only worth $200,000. Well, that's probably what you could sell it for, or what they may say it's worth. When we write insurance on a home, we're looking at square footage. So we're trying to do the home around $100 a square foot. So a 2,000 square foot house, we're trying to write for $200,000. A lot of people want to lower that. Oh, my mortgage is already paid off. Let's drop that down to 160, 180, something like that. Then they have a fire, and really bad fire, and they don't have enough to cover that. Another thing with those coverages, there's mainly 2 type of policies in the home insurance. It's an ACV policy and an RC. ACV stands for actual cash value. RC stands for replacement cost. ACV is always going to be a lower cost policy. So it looks good on the surface, but unless you can read all the fine print about what it is, you're not going to know. And what's going to happen is, for instance, your home burns to the ground at an ACV policy. The thing is, then you're not going to be able to shop at Best Buy or a nice furniture store or whatever to get your equipment. You'll be at a garage sale buying things because they're not going to give you the full value of that house. Right. Replacement cost is, so if that TV goes down, the home gets burned, you're going to get the same type of brick, same type of wood, same type of shingles, buy the TV and everything. So it's going to put you back whole where you are. So that's sometimes I have to, I hate to say fight, but go back and forth with my insurers because they're like, well, my home is not worth that much anymore. I'm saying, but in square footage wise, it needs to be about this much, because if something happens, then you're going to be, maybe not have enough money to rebuild that house.
Right. I want to get into a couple of areas that are swimming pools. So if I have a swimming pool in my home and I think my home is insured and a kid comes over and he's playing and gets hurt, what is my coverage?
So in your home insurance coverage, you have a coverage called liability coverage. The minimums are around $25,000. Our minimums, what I write, is $300,000 in liability or more. I try to make liability more than what your home is worth. Okay, that way, because we're in a litigious society. People want to sue people, and I want that liability to be high enough to kind of have to fight through that to try to get your house. So what that's going to cover is, kid comes to the house or family event, somebody trips and falls, they break their arm, hurt themselves, as long as you didn't do anything wrong and it just did happen, but they decide they want to sue you, that's when that liability will kick in, that $500,000 or $300,000 to try to fight court costs. Right. So you got to fight against the insurance company at that time.
So that's going to come with most all of your.
Yeah. But I always recommend at least $300,000. Some people they'll go lower, $100,000, and that amount from going from $300,000 to $500,000 is about $10 a year. Okay. It doesn't cost that much. When I've seen it happen, just real quick on that, when I've seen it happen, you talk about pools. I've seen it happen two or three times like that. Somebody at a swimming pool getting hurt. The other time I've had a family where had the star athlete over the house with the other kids. They're rough housing plan. Kid messes up his wrist. He's a pitcher. They figure he's going to go, college, pro, whatever. So the family's pretty upset. So, of course, we want to sue you for horseplay the kids had. So that comes up.
I'm trying to throw Mark a curveball. He's got all the answers. I'm going to give you one more.
All right.
So occasionally I rent my house out on Airbnb when we travel.
Okay.
What's my liability when someone's in my home?
Well,
let's say the house caught on fire while they're there.
Okay. So there's a couple of things there. First of all, if it's your primary home, you need to check your policy and make sure it's okay for you to do Airbnb. Okay. Because it's probably maybe an endorsement they can put on there, or you may have to write another policy that includes an endorsement. Okay. Because what could happen is, in just scenario, home catches fire, you make the claim, and they ask you what was going on. Oh, I was renting my house out this past weekend, and the guy said he left a pot on and it caught fire. Ding. You rented your house out. Well, that's your primary house. Why are you renting the house out? Yeah. Your claim may not be covered. So I would check, because a lot of carriers now, a lot of them are adding that temporary rental, Airbnb, they call it something like that. So I would check that and make sure you got that box checked that you can do that. It may cost a bit more to be endorsed, but that covers you in case you're renting it out and something happens when the renter's there.
Well, I was going to ask a question here, but I think you've answered it to our audience. I was going to ask, what's the difference between, what's the value add? But obviously, I've owned my home for 30 plus years, and I learned something here today about my coverage, and I'm going to go home and get my policy out if I can find it.
Exactly. Yeah.
But, really, you ought to reevaluate your policy annually.
Yes, sir.
I know people don't do that, but, what you get with a guy like Mark is obviously the knowledge and experience. So I hope I can encourage all of you to get your policies out and take a look. Mark, if they want to reach you to ask some questions, I'm sure you'd be happy to answer their questions.
Sure.
Where would they reach you?
Sure. My office number is 281-397-3001. It's 281-397-3001. Or you can email me at mark.boudreaux@goosehead.com. And that's Mark with a K. mark.boudreaux@goosehead.com.
And that's Boudreaux with gumbo, right?
Boudreaux with gumbo, etouffee and everything else.
So you've been doing some networking. How has networking actually been working for you?
It's been good. I've been in the group. I'm going on my second year now, I believe, and met a lot of good people. Barbara is our leader there. And with my company, with Goosehead, a lot of our business comes through realtors, loan officers, people like that. And I've got those in the group, and we've done a lot of business together with that. So it's been definitely helpful to be a part of the group. We, not only the monthly meetings, but also the get-togethers, the lunches, those things have been helpful, and also expanding my network sphere with other people too.
Awesome. Well, I really appreciate you coming in and
educating us today. Thank you, sir. Appreciate it, sir. Thank you for your time. Appreciate it. Thank you.